Morning all, how are we doing? Morning Stevie, morning Ladder, morning Diamond. Right, sorry, I'm late this morning. I got out of the shower and I was just getting dressed and I was like, Christ, 10 to 8. I was late. I'm here. I'm just gonna test a strategy this morning that I've been building an EA for. In fact, what I might do is just pop the EA on a fresh chart. Blah, 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 blah. So 1 sec. 2, 4. I'm going to just run it with 0.5%. Not going to do that. Not going to do that. Not going to do that. Right. I'm testing an EA. I just want to live test it quickly. Be a maximum of 3% risk on the trade, but I just want to see if it works. And it's based off of a question that somebody asked me yesterday, which I'll go into in a little bit. But let's quickly cover the news before the market opens, because I want to watch the market open this morning. It's on 5-minute chart. It's 4 minutes too. That's fine. We got bank holiday in Japan today, which could mean big volatility. We will see. We quite often get a lot of movement on these bank holidays, but the fact that it's an FOMC Japanese bank holiday, I'm not sure if maybe that might counter that or that might counter that, and we may not get any volatility on the yen, but we'll see what happens. We can only tell obviously when the market opens. But obviously today's FOMC day. One of two things happens on FOMC day. We either get, and quite often get, that all day because nobody's interested in doing anything until they've seen what the FOMC meeting minutes are, or they're going to reach for levels and take out some liquidity, and then FOMC reverses it. So we will see what happens. You never know until the day's starting as to whether you're going to get a massive ADR day and loads of volatility, or you're just going to get there. So we'll wait and see what happens. But we've got obviously that bank holiday today, FOMC this evening, and we've got PMI figures coming out all morning. We've got the Euro, we've got the French and the German PMIs at 8:15, 8:30. We've got the UK PMIs at 9:30. Then we go to durable goods just before market open. Quarter of an hour after market open, we've got flash PMI for the US. And then obviously FOMC later on. And then tomorrow is Thanksgiving, so the market's going to be flat tomorrow. So today, I expect to be explosive, but I don't know if it's going to be explosive today or it's going to be explosive this evening, or we're going to get 2 explosions today. No idea, but we should get some movement. We've had the rates on the New Zealand dollar this morning. They came out very early and they came out as expected. I was expecting a little bit more weakness off of the New Zealand dollar. We actually got a whipsaw and a little bit of strength. So the New Zealand dollar pairs, this is New Zealand dollar CAD, which I'm in at the moment. I'll be getting into another position there on the next reversal alert off of ADR. Basically, we got a very big whipsaw, as you can see, off the news, which is quite typical with New Zealand. And then not a lot. And we've had a little push towards the end of Asia. So we'll see what London makes of it. If London brings it back down to here, then there's no fundamental shift on the New Zealand dollar. I'm not expecting one off of that. It's a rate announcement that's been factored in. The New Zealand dollar's been moving ahead of it. So I suspect we're just going to get continuation movement on it. New Zealand dollar Swiss, big movement, and then sideways, a little bit of a push up. Same here, a little bit of a push up. New Zealand US, a little bit of a push up. So there's not a massive movement off of it. We've got ADRs, we've got Aussie New Zealand's hit ADR, we've got the other New Zealand's hitting ADR, but they've just hit ADR. So it's not a very, very, very big reaction. So I just need to watch this as the market kicks off. 45 seconds. I'll explain what the CA is doing in a minute. It's just a variation of the opening range breakout, basically. So yeah, so basically, not sure. We'll need to wait for the New Zealand dollar, but it certainly had a little bit of a positive reaction to it. Obviously, we had the usual liquidity run. So anybody that's got in yesterday got liquidated before they took price up, the usual. Let's all go long. I'm right about my direction. I'm wrong about my stop placement. And now I'm a poor man. Usual story. So we'll see. I get the feeling that the New Zealand dollar won't be massively strong off the back of this, but we'll see what happens. So we just opened. RSI alert's gone off. We'll have a look at those in a minute. So yeah, so that's what we need to prepare for. Obviously 8:15, we might have a weak open with the DAX this morning, which is kind of why I want to test the EA that I've built, see how it reacts in what I'm expecting to be a wide range open cash balance and then a narrow range until we get these news events coming out. I want to see how it performs. So yeah, so we might have a bit of a weak open this morning. Obviously, the initial range candle that goes in, the initial cash balance, which is the dump of orders at the open, could well be quite a big one this morning because they'll want to get rid of all the orders before the news announcements and all the speculative trading starts. So we might find we get a big range and then we just get inside bars until 8:15, which would suit me down to the ground because this particular strategy works on placing 3 orders in the market based on the opening ranges. So well, I'll explain all that in a minute when it starts trading. So yeah, so that's the news overnight. There's not a massive amount that I could see on the overnight news, the sort of what's been going on around the world in Asia. This is the bit that I hadn't seen before, which was kind of the important bit, the 5.5%. So the new Bank of New Zealand, Royal Bank of New Zealand, is forecasting another 1.25% increase on rates over the next X. I'm not quite sure what time period they're looking to release that at, but there's talk of a lot of countries now reducing back down to 0.25s and 0.5 increases from 0.5s and 0.75s, which makes sense because if they put the rates up too quick and too hard, it will really crash the housing markets around the world. So they've got to be a bit careful with these. So considering increasing their rate by 75 or 100. All right. Okay. So next time they're thinking of going up. Right. Okay. Well, that's the opposite of what other countries have just said, as I just said. That's interesting. I didn't see that one. But yeah, so we've got another 1%. So they're going, oh, here you go. So they're going to go up by 0.1 in December. So they're going to do a tiny increase in December, and then they'll probably go a little bit harder. But yeah, that's it really. Overnight, nothing particularly exciting. Intends to offer Russian oil stuff. Yeah, so that's all the news that we've had. So we'll get ready for the 8:15. So there's your big opening range, as I said. So yeah, we've got a very, very, very big opening cash range this morning. Absolutely huge. What size is that? We've got 2 minutes left on this candle, but that's a big old range. So I don't think we're probably not going to break outside of this range this morning. We'll see what happens. So I took another short this morning on this as we started to come down at the open. I've got some sell stops sprinkled on the DAX. Probably better to look on the DAX over here. So I've got some sell stops sprinkled basically on the way down. Yesterday I got out of a couple of DAXs at break even. You remember I had a couple of 0.5s on the DAX yesterday. It came down and I had 2 positions on and I decided to put a break even on them. So I stopped out of them. It's just not going anywhere. We just can't get any movement off of this DAX. So I've still got my sell orders. I've got the EA taking positions for me, which are these 2. I'm sprinkling manuals in here, which is kind of a scalping it's me kind of scalping on top of the position trade, just trying to get this initial order built up. I want a decent size order for when this leg starts, because I really want to milk it if I can, but it just can't get going at all. You know, we've got 30 seconds left on this candle. So yeah, DAX yesterday, same thing. So there's our little range that we drew in from that low to that high, which is these black lines here. We tapped outside of it yesterday. We looked like we tapped outside of it and pulled back in, and then it decided to push up a little bit more, and this morning it's pulled back down. But there's just no, you know, we're not making any progress. You know, there's no higher lows, higher highs, higher lows, higher high. We're just not getting anywhere. Yeah, we're taking a sell on that there. The opening range. So massive opening range this morning. It is, well, it's not that big. It's 40. Not that big. 40. It's still quite big, isn't it? But so yeah. So again, we've just tapped. You know, we've got a higher high. We've got a higher low. But the day before that, we've had an inside bar, and then we had a higher high and a higher low on that candle. But you know, then we had kind of just an outside bar, but we stopped as a doji. Then we had an inside bar. It's just not got any momentum, and I just get this feeling at some point we're waiting for something, and it's going to trigger that movement. We're going to break that low, and all hell's going to break loose. But we will see. So yeah, DAX short. That just added a second sell there. Yeah. Okay. I can't actually see what that's doing because there's candles in the way. No, that's a manual position, isn't it? Okay. I'll explain this all in a second. Looking at the US indices, we had a bull day yesterday on the NASDAQ. So intraday yesterday, we basically didn't go anywhere, and then we had a massive rally at the end of the day. The S&P obviously did the same. New York opened, it didn't look back, and the Dow did the same. So it was nice yesterday to see the Dow, the S&P, and the NASDAQ coming back into tandem with each other. Obviously, we had on the DAX yesterday all that price action happening in the London session, and then New York just trickled up to the highs. So we are still a little bit out of whack with the indices, but the indices obviously in the US decided yesterday that they were going to put in a bull day. So we've broken out now of recent highs. So we'll see today if we put it back in. I suspect there's a possibility that yesterday's move ahead of FOMC is a load of people offloading ahead of an FOMC move potentially to the downside. So I'm kind of biased short on the indices this morning with a view to them pulling back inside this bar, getting ready for FOMC, and then we'll probably just sit around during the New York section, but we'll see what happens. Oil yesterday, we attempted a bull run yesterday, didn't quite get there. So I'm looking for this level to break here to get some decent momentum to the upside. So what I'm looking for obviously on oil is this level to be holding. We've got a lovely rejection there, which worked beautifully on Monday. We've had the bull day, so it's kind of a 3-bar reversal formation there. We're looking for the follow through. So break of yesterday's high today, and I'd be fairly confident to say that we're going to come back up and at least retest 95. So, or 94 as it is. So I would go up to there for a retest and this becoming our range. But we need this to hold. We need confirmation of this. Don't want to muck about in here. Want to get this started. So we'll see what happens with oil today, but oil's looking positive. Oil's looking good. Nice open London at the moment. I took some nice profit off of this yesterday as well. I've got two positions on, two aggressive positions on, which I'm just above break even on. I'm TPing on these two here, and then that will give me the opportunity to scale out a little bit more up here, and then I'm basically back in normal position sizing and escaped from oil. But we will see. Got to escape it first. Ladder, if I have that correctly in the back of my mind, Morgan Stanley called for a target of the S&P 500 at 4150 before dropping lower. I've no idea what they've called. I don't follow them. Okay, so but yeah, S&P 41. I don't trade the S&P, so I don't know. I don't really pay any attention. 4150. Yeah, they're going to call 4150. It's up there. 200 ADR. I think what Morgan Stanley, it's the same as everything, right? Morgan Stanley can call what they like. Morgan Stanley aren't in charge of where this goes. They have speculators who are probably long the S&P. So what you have to understand with any institution that calls anything, or any talking head that says anything, or any pundit on Bloomberg's channel that says something, there is always, whenever somebody says something like that, an underlying reason for saying it. If Morgan Stanley are calling 4150, it's because they want to rally the market to 4150 because they've got positions long. They're hoping that there's going to be a Santa rally. And I proved last week that Santa rally in a bear market is a 50-50 shot. We've had two bear markets at Christmas. One of them went up, one of them went down. The odds of this going up and down from here in December are 50-50. Morgan Stanley have flipped the coin long. I flipped the coin short. We've both got as much chance as anybody. So yeah, if it goes to 4150, fine. Come down from there. It could come down from here. I've no idea. No one knows, have they? Morgan Stanley don't move the S&P. They've got analysts which are analysing it and saying that's what we should do. Other institutions will have analysts saying it's going to be short. I've heard plenty of people saying we're in for a bear rally in Christmas, up to Christmas. So, you know, there's always two opinions. There has to be. If Morgan Stanley are buying, they've got to be selling to someone. Someone's selling, aren't they? So an organisation the same size as Morgan Stanley, if Morgan Stanley wants to execute their orders, somebody's got to be sitting the other side. You know, so it could go either way. If you think you're getting in too early and you want to be on Morgan Stanley's side, get out. You know, you've got a choice. You have to make that decision yourself. That's why you're the trader. So just going to quickly look at ADRs while I'm waiting for this. I just want to wait for this the 15-minute candle to be in, and then I'll explain what that's doing. Aussie New Zealand. So that's pushed down another leg off the back of the news. The reason this is an ADR here is not necessarily. I mean, we've done an ADR obviously because of the size of this candle. Obviously, news release it's huge, but it's happened very, very quick. So you wouldn't have been able to get on this or any of these really because the move was too fast. You wouldn't have got a reversal alert. So the only way you'd have got in is just literally hitting the button at either end, which, you know, would have worked fine. We've got New Zealand dollar CAD. So if you look at it on the lower time frame, I mean, you'd see obviously the market reversal alerts indicator when you get news releases where you have a candle that does an ADR in 5 minutes. It's useless. All indicators are useless when you get that because it just means nothing. It just means the market has stolen everybody's cash from everybody that went long or short at any point yesterday during London or New York. They're all dead basically. So the market has just stolen everybody's cash. Now it's sitting there ready to go wherever the hell it wants. So you couldn't have traded that. New Zealand dollar CAD, same thing. They took everybody's cash. New Zealand dollar Swiss and New Zealand dollar yen. Yeah, so there's no tradable ADRs today. There's nothing hit the weeklies either yet at the moment. 4 hours, the only thing we've got on the 4 hour is the Aussie New Zealand, still extended, embedded, stuck, not going anywhere. We're really, really, really stretched. So today is going to be a key day. We've had the New Zealand dollar news now. It's as expected. It's now the market's decision as to whether they are going to continue to pump or dump the New Zealand dollar. We will wait and see. It will all figure out today. We may well hold today ahead of FOMC. So now they've moved the prices down here. I wouldn't be surprised if we saw a London range and then a New York range and then FOMC. Yeah, it's had its movement today, hasn't it? The market's spilt its money in Aussie New Zealand. So I've got 2 aggressive positions on. I've got a stop on both of my aggressive positions for around about 3% down at under 125 ADR. So I'm hoping we're going to get a movement to the upside. Hourlies, nothing. We've got plenty of full RSI 14s on the hourlies, which we'll have a look at in a minute. Let me just have a look at what this is doing. So it's taken that one there, which is good. Right, fine. So I had a question. We'll do an analysis of all the pairs in a minute because it's Wednesday. We'll run through everything, but I just wanted to cover what this is doing. I had a question yesterday from somebody about trend, and basically saying, why do I trade against the trend in respect of mean reversion? And it prompted me to re-look at the opening range breakout strategy that I trade on the opens on New York and Frankfurt. And basically the trend, the question was, why do I trade against the trend when I know full well that there is a trend in one direction? So Euro, US dollar, for example, or DAX, for example. Let's look at the DAX. Yeah. This is what prompted the question from the person. On the aggressive trades usually, what percentage do you risk? I basically put on half of whatever I've got on. So I've got 1.23 lots long at the moment. So my aggressive positions are 50% of that. So 0.6. The idea behind aggressive positions, the way that I use aggressive positions is if I've got 1.23 lots on, yeah, and my average is too far away. My average without these aggressive positions on, right, is something like 225 ADR. I'm totally out on this one. Totally out. Got it wrong. So these positions, and sometimes I go in with the full whack. I go in with a 1.23. But what I prefer to do is I split it down into smaller positions. So the idea is aggressive positions are put on with 50% of my total lot size, because what my goal is not necessarily to be right on the positions and make a fortune. My goal is to get this average down so that price can actually get to it. Then I can take that off and get rid of some of this stuff that's wrong at the top. So my rule is not risk, it's position size. My stop goes in a logical point when I get on. So I got on this morning with this and I was like, where shall I put my stop? Well, this is the low of the day so far. Let's give it some breathing room. Whatever that risk is what that risk is. These are aggressive positions. These are last stands. Yeah. So it doesn't, if it costs me 3% or 5% to do this trade, I need to do it because I'm too far in the hole. These are, I've got one bullet left in the chamber and I need to make sure I hit type trades. So the risk on this position is about £130, which is around about 1.4% on that one. This one, the risk on this one, this one is a little bit of an anomaly. The stop on this trade here should have been around about here, okay, 1.6%. But because the news was happening, I knew the news was happening, I knew they were likely to spike out everybody, I didn't put a stop on this one, this aggressive one, until this morning. And the stop is now here, which is 3%. So my total risk is 4.3% or 4.2% on both of those positions. But if I'd have put my stop in the market, obviously, on that position this morning, I obviously would have got taken out because it's interest rate announcement. So So yeah, so that's it. So, you know, the idea is with these two positions, all I'm looking for now is a push back up into the highs, and I will get out of some of this. I'll get out of that one, and I will start knocking back these higher positions. And if it goes wrong, I'm going to lose 4% of my account. But I'm totally wrong on the Aussie New Zealand. Yeah, this is probably one of the most wrong trades I've had in a long time. This is one of the worst squeezes I've been in for a long time. And the thing that makes it even more annoying is I had an opportunity there to get out at break even, and I didn't take it. I decided to take profit and do drawdown control and then scale back in. Clever me, eh? So I'm running a 0.3% profit on this trade. So I was in the middle of telling a story of this, wasn't I? Good morning, Lee. How long since? Long time since I've stayed up to see you live. Oh, David, hello. You're the man. Caught 1% on gold buys using my Renko setup. Oh, the days we were talking about Renko. I remember those days. Good old Renko. Renko's good. Right, so yeah, just going back to the this. So I was asked why I'm trading against the trend. So looking at the DAX on the daily chart. This is the 4-hour, but these are the daily moving averages. So I'm shorting the DAX. And the question was, why are you shorting the DAX? Look at this thing. It's like an absolute rocket. So I'm building a position as a mean reversion trader when the market is extended and stretched, waiting for the profit take move. So we know that, that's fine. This person that asked the question then proceeded, I was talking about, you know, how do you trade? What do you trade? And he trades on the M5 time frame. And he said, you know, I would never trade against the daily trend. And my argument is, if you're trading the M5 time frame down here on the DAX, right, and you're getting in on price action or whatever your system or strategy is, your goal is to get out after a few candles or get out, you know, maybe after 5 or 10 candles. So worst case scenario, if you're scalping, you're never really in a trade for more than an hour, are you? If you're a scalper, or if you're trading M5, you're trading M1, maybe even M15, you know, you're not getting into a trade looking to hold it. So what the hell does it matter what direction this is going? Yeah. And this was my response, was not in a nasty way, but look at these hourly candles, right? If you are trading in line with the trend and you are only interested in taking a long position, why would you not take all of that money, all of that money, all of that money, all of that money, and all of that money? Yeah, look at these hourly candles. This thing in 1 hour can go down that much with no problem whatsoever, and it can flush like that. Yeah. So why miss all of these opportunities if price action, like it is here, and this is partly why I rebuilt this opening range breakout. Price action this morning is telling us it's short, right? If you're long bias on this on M5, it's got absolutely nothing to do with the 5-minute time frame. 5-minute time frame is order execution. It's going like this all day long, right? So moving averages and trading with the trend has nothing to do, daily trend I'm talking about here, has nothing to do with the 5-minute time frame. Totally irrelevant. I can be long, I can be short. So what I decided to do was to rebuild the opening range breakout, because the opening range breakout part of the price action toolkit, which is this one here, is designed to trade the opening range breakout, and it has no bias. It doesn't care whether the market is long, short, we're going into a recession, Donald Trump's just got back in. It doesn't care if there's a war started. What it is interested in is price action and momentum. So if we have an opening range and it breaks out to the downside, the market's going short, the EA is going short, the EA is going to try and make money on the short side. If it breaks out to the upside today, it will do the opposite. If it breaks out to the downside, moves up to here, stops out, and then breaks out the top, it will take a long, because momentum has changed. The market was going to go short, and now it's decided to go long. Yeah. So my point was, if you're, and that's brought me on to the point about moving averages. If you're trading the M5 chart, the only moving average you should be interested in is the 5-minute moving averages. You should be looking at the 20, the 50, the 200, whatever moving average you want to on the 5-minute chart. Because if you're trading the 5-minute chart, you're trading candlestick chop. Yeah. The only thing you're interested in is on this chart right now, is the trend right now up or down? The trend right now is down. Do you want to be taking longs? No, because it's going down. So the moving average here, if we put a 9 moving average, would be like that, won't it? Yeah. So as soon as that candle crossed down below that 9 moving average, you'll buy a short on it. If you're going to use the 9 moving average, for example, which is what a lot of scalpers use, a 9. So I just wanted to sort of labour that point. And I built this EA, right? And what this EA does is it takes the 5-minute, the 10-minute, and the 15-minute opening candles. So you can see OR1, OR2, and OR3, OR1, 2, and 3. So this is the 5-minute opening range. This is the 10-minute opening range, and this is the 15-minute opening range. And what it does is it waits for the 5-minute candle to go in, places a pending order there and there. It waits for the 10-minute candle to go in, and then it places a pending order there and there, if it's not the same price. And then it waits for the 15-minute opening range to go in, and it places another pending order at the 15-minute. And if the 15 is the same as the 5 or the 10, it won't place that. So it's obviously not going to place 3 orders at the same level. I mean, I have tested that, and God, it makes a lot of money. But when it makes a loss, it obviously makes a big loss. So I built this EA to test and to kind of demonstrate the fact that it doesn't matter on the 5-minute chart what any trend is. A trend on the daily, and the reason I use the daily, which again, I sent this person back to the bootcamp to watch why I use these moving averages on the daily. Oops, sorry, I just switched that over to the wrong time frame. The reason I use the daily is because I'm trying, when I'm position trading on higher time frames, don't forget I execute my positions on 5 and 15-minute charts, but I'm trading hourly and 4-hourly time frames. I want to stay in line with what the market is doing. So when I'm entering on the 4-hour, I'm using the daily just to give me a directional bias as to what the long-term view of the market is. Yeah. The DAX is a bit of an anomaly, obviously, because the DAX, we're expecting this bear market to continue, and we are massively stretched. So it's a little bit of an anomaly. But look at something like the Euro US. We're in a downtrend on this thing. Just because we've popped our head above there doesn't mean that we are necessarily long bias. It doesn't mean that the US dollar has suddenly become massively weaker than the euro. It means that the euro's had a bit of a growth spurt. The US dollar's had a bit of a weak spot. But long term, this thing should continue to go the same way. If you're trading the 5-minute time frame or the 15-minute time frame, yeah, if you've been doing nothing but shorting this thing, yeah, since we started to push up above that daily moving average, you've been absolutely annihilated. Yeah, 5-minute and 15-minute time frame. If you're going to trade these time frames and you're going to be in and out on these time frames, you stick to the moving averages on these time frames. And if you want to be really picky, you can use a fast moving average maybe on the time frame above to give you a directional bias. But why not use a slightly slower moving average on the time frame you're trading? Make it simple. No need to flick between time frames. Euro US dollar, I've just gotten a sell, by the way. EA's just got me in that because the EA is set up to get me in short when we are extended on the hourly RSI, which is just done. So I built this EA, and what it does, as I say, is it just gets me in at the opening range. It gets me in on a break of the 5-minute, it gets me in on a break of the 10-minute, and if the 15-minute is different, i.e. if that was a 15-minute candle, it would have a pending and it would get me in down there. And what it does is as soon as I'm 20 pips in profit, which is that one, yeah, it moves the break even, the stop to break even. So that is now risk free. And it automatically trails every position by 40 pips. So the idea of it is it gets me in regardless of what my bias is, what I'm thinking, what my long-term thoughts are. It basically gets me in on what the market's doing. The market's going short, I'm going short. But it keeps your risk really tight. It break evens very fast. And if that stops out, that's not a problem because I've still got this one on here, which is still working. If, however, we go into a trend day, and remember I said, I make my money on trend days. When I'm trading, when I'm scalping, the trend days is where I make all my money. The range days is where I get stuck. On these trend days, this EA will make anything from 3 to 10% in a session. On a range day, it will lose usually somewhere about 2 to 3%. On an average day, it will make 1 to 3%. Because all it's doing literally is trading the price action in the direction it's going. Moving average has nothing to do with it. So thank you for that person. And I haven't got your name, but I don't even know what your name is, because your name in the Telegram group is nothing, nonsense. But as most people's are. But yeah, it prompted me to rebuild this EA, and I've back tested this thing, and it's amazing. So I shall be further developing this today to basically labour the theory. And I'm just back testing different trailing stops. So that one now there is now break even. So I've got those two positions taken. They're both completely break even. I'm 0.7% in profit. Don't forget, I'm only risking 0.5% on these positions. Yeah, and these will stop. These will start trailing. These will carry on trailing 40 pips. Yeah, so this is 30 pips in profit now. I could close it out if I wanted to now, obviously, but if this thing is going to if this thing's going to trend today, it's going to do that. Yeah, let it run. The biggest trade I had was 11.2%. I've only back tested this over a year so far, so I've got a lot more back testing to do on it. It's made 11% in a Frankfurt session. Mental, absolutely mental. But yeah, when will it be for sale? Yeah, I don't know. I'll see how it develops. But look at this thing. Yeah, this is exactly what it's designed to catch, and this is why today was particularly interesting to me to live test this today, because I was expecting a wide opening range, because I was expecting the market to get their cash orders in fast. So I was expecting a big one. What I was then expecting was a strong break on the news, because at 8:15 and 8:30 we have European news. So I wanted to see, and I was hoping today was going to be a trend breakout day. I was hoping it was going to do exactly what it's doing, which is a fast, sharp move. And these are the days it really milks it. But the other thing that, and this is the other thing we touched on in this conversation I was having with this guy, was about the moving averages. Yeah. You're now a short bias, and every bean in your body is telling you that when you get down to these levels, we should be taking profit. Right now, I'd be going, oh, I'm out, because I'm watching it. My back testing shows that that's completely the wrong thing to do when you come out the gates like that. That makes no difference. That makes no difference. That makes no difference. These days where this thing wants to sell off hard and go into a trend, support literally acts as a bounce, and it breaks around 70 to 80% of the time. I've watched this. I sat here yesterday after I built this, and I watched this ticking over live in the strategy tester, which is an amazing thing to do if you haven't done it. Yeah, just hit the button and watch the thing, watch it work, and your eyes basically will fine tune your eyeballs into seeing price action. Yeah, so that made 0.4% on that break there. 0.6. Negative 0.2. The reason it made such a tiny loss is because we are moving our stops to break even so quick, and we are trailing every position so tight that if it comes back against us and the opening range breakout fails, as we know they do on a regular basis, breakouts fail. Look, that's what they do, isn't it? Breakouts fail. We know that. This is why we have ranges, and 80% of the time the market spends its life in range, doesn't it? So we need to be stopping these out fast, which is what this does. But I was watching this and I was like, these days where it really goes for it, 0.3 loss there, 0.5 there. Since it has losing days, obviously. But when it gets these biggies, it just goes mental. I don't know if I've got this on the right settings. I might not have. 1.4, -8. There's a 1.9. This might not be on the right set. There you go. Look, This is what this is designed to catch. Everybody, me included, I'm out here. I'm done. Oh, hey, look at that, payday. Idiot. And this is kind of like my moving average would have been like that. Yeah. It's also got a setting in there to use the user moving average to get you out of the position. But these days, yeah, that 10.8% day there. I mean, it did more, but you know, there's only so much you can do. When you catch these opening range breakouts on a trend day, the problem with trend days is you always go for that 1%, 1.5%. Watching this thing ticking over, I'm like, Jesus, just stick this on a prop account and forget about it, because this thing, when it wants to, will go nuts. I'm working on development to catch, try and catch some bigger moves, because what I also find is, as an example here, you'll get stopped out there, and then you miss the move. So I'm working on an algorithm to detect that kind of movement. So break, retest, break, to try and get you back into the positions, which I'll be working on today. Just working on a way to improve that part of it. But yeah, basically it's a trend breakout EA, and it'll make lots of little losses, but then it will get these nice big 1, 2, 3% days, and it has the occasional 5, 10% day. And basically annual return on it was 67%. But as I say, I've only backtested 1 year, and I haven't optimized it. I haven't done any setting optimization on it in any shape or form yet. And there's also the other thing, you know, you can set yourself a daily cap profit. It's having a bit of a bad run at the moment. Oh, that's right. Yeah, here we go. So there's a 5.3% day. Yeah, look where it got you out. 40 pip trailer. Again, I'm working on a way to leave one position on if you've got 3. In fact, that one you only had 2. And again, I'm working on another part of the algorithm to scale in. Just keep scaling in. If you keep scaling in on this thing, you'll have a 15% profit down there. There's lots of things I've got to develop it. But anyway, that's basically why I sort of started working on that. So I just wanted to cover that. And thank you to the person that sent me down that path. Always good. Yeah, 1.1. Not bad, eh? It's not any new strategy, Johannes. This is Price Action Toolkit already does this. So you've got the ORB in here. It will automatically trade the opening range breakouts for you for New York and Frankfurt. But this is the Price Action Toolkit. The main purpose of this is not opening range breakouts. The main purpose of this is the trading buttons. That's what primarily what that's for, and obviously for risk management. But this is purely just to develop the ORB strategy. But I need to live test it, and this is why today was obviously a nice live test, because I knew we were going to get some movement today because of the news. So let's see what we get. We'll leave that running. Anyway, let's have a look at the the RSI 14s. So yeah, so the long and short of that was basically, if you're scalping, right, moving averages are totally irrelevant. I have on my chart the 20 and the 50 on the 5 minute. That's all I need. I don't really even need them, but you know, if the 20 is above the 50 and we're bouncing like that, yeah, don't take a short. If it breaks down below the 20, you need to be thinking, not sure if I want to go long anymore. If it breaks down below the 50, you want to be thinking, yeah, I want to be short. Yeah. What's happening on the daily moving average, the 4-hour moving average, or the hourly moving average, which are all long at the moment, have got absolutely nothing to do with scalping. That's the long and short of that half-an-hour story. Anyway, so yeah. Right, so 4 hours. We've got EuroCAD. Sorry, 1 hours. We've got the EuroCAD just extended. That's just tipping over at the moment. So that was a nice short entry. Don't know if anybody took that one. We're short bias on EuroCAD. Nice hourly M5 reversal alert and retest. So beautiful M pattern reversal there. Getting short. So I've just taken the euro US dollar. So euro pound again extended on the hourly. Not quite sure still on the bias of this. Obviously at the moment it's down, but for the euro pound to be coming down would indicate that we're going to need probably a strong pound, and I don't think we're getting a strong pound. So, you know, this one, there's way better position trades out there than this. This is just a sideways mess at the moment with the odd movement. So it is moving very nicely, and obviously that short would have worked very nicely for you if you'd have taken it, or will work very nicely for you probably if you take it. It hasn't actually triggered yet. But on the hourly, obviously we are extended, so it's very up and down, and as long as it's like that, you know, you're going to be able to get out whichever way you go with it. So so that's euro pound, but obviously you're better off tying your money up in another euro pair. Euro yen, we've got an extension to the upside. So remember I was saying I'm looking for shorts on yen pairs based on the more likelihood of intervention. The euro's having a bit of a push up against the yen at the moment. We've got the hourly extension. We've had the retest already on this morning. I looked at this morning when I saw the reversal alert. I quickly flicked through the charts. I saw the reversal alert. I saw the hourly extension this morning, and I was like, shall I take it? It looks like it is going to work. So euro yen, nice looking short opportunity there as well. So it's nicely extended on the hourly. You can see we're in a range at the moment, which we've just broken out the top of. And we've got this area of balance that we stuck in for 4 days here. And then we had that nice propulsion gap as we broke that low, which we haven't come up into yet. So the only cloud hanging over the short entry here is I get the feeling there's a possibility of a retest on this level. It may not. It may just go from here, which is fine, because they've just taken, if you look at the liquidity grabs, this is an absolute textbook. You couldn't make a better chart for demonstrating stop runs, could you? Right? Let me unray that. Yeah. Pushed up, pushed down, everyone goes short, stop above the high, they come up, they take the stop. Push down, everyone goes short, stop above the high, they come up, they take the stop. Push down, everyone goes short, they come up, they run the highs, everyone's stops are gone. Rinse, repeat. Rinse, repeat. Rinse, repeat. Yeah. So what do you think is going to happen now? I mean, it doesn't get any simpler, does it? If you want a trading strategy, we've got the advantage on our side now that the RSI is there. We've had a stronger push than normal. So looks like a lovely opportunity to go short. And it's just running liquidity constantly. I get the feeling we're going to run liquidity up into, as I say, into that propulsion gap though. So that, and then expect potentially that, or it could just go and do that first. But looks like a good opportunity on euro yen as well for a short. Just going to be a bit careful with the yen, obviously. Euro US dollar, I'm in short already, so extended on the hourly. Same play as this, basically. Looking for a flush. We've just had the 5-minute reversal alert, so that's why I'm in that one. You see I got in on that candle there, which is the reversal alert after a triple wick high. New Zealand dollar yen. Again, another one extended to the upside. This one is you've got to be a little bit more careful on, because obviously we've just had the New Zealand dollar news. So we need to see if the market is going to be bullish or bearish off the back of the rate announcement. So the rates, we've been buying into the rates on these New Zealand. So New Zealand yen is extended, New Zealand US is extended. So we've been buying into the rates. Doesn't necessarily mean it's bullish. It means the market's been positioning itself ready for the rate announcement. The rate announcements come out as expected, no surprises. So it's whether or not the New Zealand dollar has got the strength to carry on its current movement. It's been moving a long time against the US. If you look at all these New Zealand pairs, they've had a really good run. Yeah. But they are tiring. So I get the feeling the New Zealand dollar's due a correction now. Look at this. I mean, it's been lovely and orderly on the way up, isn't it? But it's a hell of a buy cycle. And it's not that strong as a currency and as a country. Canadian dollar, if we get decent FOMC figures this evening, we get hawkish statements in the FOMC minutes, the US is probably going to pump, which is going to drive the CAD, which is going to drop the CAD. Don't forget, we've also got oil potentially looking like it wants to start a new leg up, which is going to bolster the CAD as well. So this is actually a really good entry. I'm already in this one, obviously, but it's not quite extended, this one. But all the New Zealands, we just need to see what the market makes of it today. If the market pulls back down and sort of comes back down to where it was at the open, I would say that they're not impressed with the rate announcement, which I wouldn't expect them to be, because it's just as expected. There's no surprises in there. So that's extended. And we've got US dollar Swiss as well. That's extended to the downside. Again, looking for US dollar strength. That's already started. You're just about to get a reverse alert on the hourly. But we were embedded. So if you were long US dollar Swiss, you were in it probably from here yesterday. So you may have got 2 on it. Probably not. No, it's too far too close to be getting into 2 positions. But reverse alert's already kicked in on that one. But the US dollar Swiss, it's a real roller coaster ride if you're in that at the moment. So it's very difficult to tell. It's all driven by news. The whole of all these, every movement you're seeing in this is all news driven. Yeah, this is the rates, the inflation figures for the US. It's all driven by news at the moment, especially the US dollar Swiss. So not quite as keen on that. But Euro US dollar and Euro yen are probably my picks for shorts. I'm in the Euro US. Will you include this strategy into the price action toolkit? No. It's a different thing. The ORB is kind of a bonus. And you can set the ORB up pretty much the same in this. It does it all, really. It does the scaling in. It does the trailing stops. The price action toolkit does all of this already, really. So if you wanted to replicate what this is doing, it's the 5-minute opening range breakout and the 10 and the 15. You don't have to use all 3 because quite often, most of the time, you will find that 2 of them will be the same, because after the initial push, you normally get a pullback. So ORB2 at 10 minutes and 15 minutes, they're usually the same level, which is exactly true today. Sometimes you'll get a push, pullback, push, like that. So that'll be 5, that'll be 10, that'll be 15. And then you get that. That's where you make the big money. And then I've got it set so that it will auto scale in at 20 pips, which is what the break even's set to. So what it does is as it gets to 20 pips, it moves the previous one to break even, adds, moves it to break even, adds, moves it to break even, adds. And it keeps doing that until that moves over. And if that move lasts for an hour, happy days. If it doesn't, never mind. You just stop out break even on most of the trades. It's not designed to be right. It's designed to take advantage of strong movement, momentum moves at the open, which is why a lot of the days you'll find you'll make a 0.2 loss, a 0.3 loss, a 0.8 gain, but then you'll get the 1s, the 2s, the 5s, the 10s, and the P&L curve on it looks like that, which is exactly what you want a P&L curve to look like. Yeah, you want it to, it's catching the big ones. But you can do it with the price action toolkit already. You can get it to scale in. You can use the scaling in function on candle close. It does pretty much the same thing. The reason I built this is this is what I call a low. What do I call it? Not really. I don't call it anything. This is basically a low impact code version. So what I've done is I've extracted the ORB, basic ORB algorithm out of here, got rid of all the other crap, so that this is stripped down code so that I can test it quickly and I can make very fast alterations to it based on inputs. So I can test, should I be taking all 3 or should I just take 1 or should I take 2? And I can put this in the optimizer, and I can run optimization on those 3. So test it again, but don't take 2. So test every combination of taking those. What's the best break-even distance? What's the best trailer to use? Should I be using a trailer? Should I be using a profit target? Should I be using a moving average stop loss? If so, which one should I be using? So I can test all of this in the optimizer, and it would just spit out what is the best way to trade opening range breakouts long term. So you can do all of that. Morning, Themba. But yeah, Price Action Toolkit already has the opening range breakout in it. It's already there. Right. So what's oil doing this morning? So let's have a quick look at oil before we start off with other things. Yes, it's moving up. Good. Oil, obviously, yesterday, we didn't really do a lot. So we had the Saudi fake news, which took out the liquidity from that drop, and it also hit these previous support lines from way back before the Ukraine war started. So we've basically the run up to Ukraine. Basically we've come back down and we've tested that, and we've bounced beautifully. We are, and going back to what we were talking about earlier, was speculators saying we anticipate a price going somewhere. So Goldman Sachs is saying we're going to get to X level on the S&P. A lot of the institutions are calling 100 to 110 a barrel before Christmas. So if that's going to happen, we need to get there. We need to start. We need to get on the road, don't we? Hopefully this is where we're going to get on the road and start that move. So we've got a beautiful bounce at the support. Yeah. So fingers crossed that's where we're going to start from. So what's the exit condition? It's literally trailing stop. There's no TP. Yeah, so there is no exit condition. We are trailing at 40 pips. So so when think about a 9 moving average. We stuck a 9 MA on here, yeah? Kind of bit like if you cross a 9 MA, you want to be out. Moves over, which is, again, moving average. I've tested this. I've tested this, and it's better not to use a moving average stop. It's better to use a trailing stop in my testing so far. But I said my testing is not exhaustive by any means. I've got a lot of testing to do on it. I need to go back years. But anyway, it's just literally trading stop. So the whole purpose of a strategy like this is, and this is, again, what I was talking about with this risk reward. Risk reward is a great idea in theory. So there's my risk. I put my reward at 2 to 1. It hits my reward. Happy days. Why didn't I set it at 3 to 1? Why didn't I set it at 4 to 1? Where's this going today? I have no idea. Let the market pay you what the market will pay you, but keep your risk reduced and tight. And if it pulls back now and it gets me out at 0.4% profit, I'm a winner. If it doesn't get me out at 0.4% profit, we get a big bearish engulfing and it crosses below there and it carries on and it gets down to here by the New York session, and then it pops up, I'll just take 2.4% or 3% or whatever it is. But I'm going to get what the market gives me. Why set a TP? FOMC, news trading, yeah? If you're short, if I've got a short on the DAX, I can protect all my stops. If the FOMC is going to drive the US dollar through the roof and this thing's going to move 300% ADR down today, do I want to stop at 100 ADR for a TP? No, I want to be taking 300% out. So let the market decide. what you set your stop loss at, the tightness of your stop loss will determine obviously where you get out. But I find on the DAX, and again, this will need to be tested across different indices if you want to use this sort of strategy on different indices. I find on the DAX a 40 pip range, which is what exactly pretty much our ORB was today. 40 is about right. But we all have days where your opening range break will be 20 pips. So on those days, is it better to set your trailing stop at 20 pips or 40 pips? Again, this is all stuff I need to test. And I can store this and use this, or I could use ATR. There's all sorts of stuff I can use to develop it. But I find, and this is what I normally trade with, this is why you see my price action toolkit set up at 40. Because that is pretty normal. A 40 pip stop gives it room to breathe and move. Anything less than 40 pips and you're getting a bit too tight. There you go. So we're out with 0.4. Yes, you could have got out with 0.1 or 1.3 was that? I don't know, whatever that got up to. Yes, you could have got out with more profit on it if you wanted to. And again, there's another option that I'm looking at, which is if you've got more than 2 positions on and we get to X% profit, take profit on one and let the other 2 run. And then when it gets down to the same percent profit again, take the second position on and let the third one run. There's never a right or wrong, is there? Every single EA and strategy that you can build, there are a million options. And they're all going to give you different results. Which one you choose is irrelevant as long as the equity curve on all of them is pretty similar. It goes up. Yeah, some days I'll take that. Some days I might take that. If I'm trading manually on a prop account and I needed to hit 1.2 to get my target, I'd have closed it there, wouldn't I? As a human, this is your decision-making process as a trader. So anyway, that was a nice experiment this morning. So oil's moving up nicely. What I'm looking for today is to come and retest this support area here. So this propulsion gap, this propulsion move after this accumulation, I'm looking for basically a retest in this area or at those levels. So I'm going to be watching carefully when we get up to here. So what I will probably personally do if assuming we take yesterday's high out and we come up into this propulsion gap, what I will do is I'll put a tight trailer on one of these in case we get some selling action back out of that propulsion gap. But I'm TPing just below these highs on both of these positions, which will be obviously not far off of ADR today. ADR today, coincidentally, is there, which is within this resistance here is within ADR today. So there's a good chance we might come and get that. Obviously, we need to try and get this done before FOMC. FOMC, you need to obviously get your stops at break evens and take any profit off the table, because if FOMC goes against you, you're going to be in the hole a bit. But this looks like it's starting, doesn't it? So fingers crossed. We are getting some movement to the upside on oil. So obviously what I was initially looking for was that. What I got was a double top bounce. But 75 a barrel seems to be at the moment a big rejection area, but we can't tell whether this Saudi move was manipulation or not. This could 100% be a fake news leak to literally manipulate the market. Conspiracy theorists, take your pick. Right, so that's the indices. Indices, obviously, we've had a push. We're looking for bearish movement off the indices today. What happened to Bitcoin yesterday? Oh, bit of a rally. So we only got an inside bar. We're doing an inside bar breakout. So if we break out, excuse me, the inside bar and close bearish, I'll be looking for shorts and come down to retest these lows again. But this is bounced quite nicely off those lows, isn't it? But this was obviously helped because this is tracking the indices now, and the indices had a bull day yesterday. So that's why we've got a bull day there. Right, gold. We'll quickly look at gold before we do the FX pairs. I've been looking for shorts on gold based on US dollar strength. So, you know, anything you take against the US dollar today, if you're in it and you're in profit by the time FOMC is released, you need to break even, because we could well get a fundamental move in either direction. I don't think it's likely that we're going to get a massive shift today, but I think we may well get obviously a lot of volatility off of it. But FOMC is notoriously hit and miss. Some FOMCs we get, you know, 300% ADR moves. Some FOMCs it does that, literally does nothing. So it all depends on whether or not there's some shocks in there that the market wasn't expecting, which we don't know. If there's no shocks, we're just going to go with what the forecasts are. And the forecasts obviously are more increases in rates and inflation rising. So there's nothing unexpected if that's what the FOMC report says. So therefore we won't get any massive movement. So yeah, gold, I'd be looking for short opportunities. Obviously we had the reversal alert last week on gold, and it's come down very nicely since into the propulsion gap caused by the previous news. And we're just sitting at the moment waiting for FOMC. So today, this evening, we'll likely get that move. And obviously if it is still bullish US, then gold will be coming down. Aussies. So I've got a short bias on the Aussie at the moment, apart from against the New Zealand dollar, which isn't working out. So everything CAD long, US long, Swiss long, yen long. So Aussie against CAD, I'll be looking for short opportunities. I obviously had that weak CAD off the back of the weak US dollar. Reversal alert, we look like we might be starting next leg down. So from obviously our peak, yeah, we're kind of in this territory at the moment, potentially looking for next leg. No reason why fundamentals shouldn't stay the same for the next 3 to 6 months, in which case we should see a similar sort of movement carrying on. But, you know, obviously things change very, very rapidly at the moment. But we're looking for short opportunities on it. So reversal alerts on low time frames to the downside. Aussie Swiss, same thing, looking for Swiss franc to continue strength. It's been very sideways, obviously, the Swissy. We've had some weakness on the Swissy, but since their rate announcement, it's massively changed to bullish. So yeah, Swiss franc will, you know, the Swiss franc, when it powers up and it goes. So it's just a case of positioning yourself ready for the next movement off the back of that. The only thing that will affect the Swissy will be the war in Ukraine. If that escalates in any way, shape or form, we'll probably get a lot of weakness off the Swiss franc. But other than that, we should expect it to be stronger than the Aussie. Aussie dollar yen, sideways. I'd be taking shorts on it, but not at the moment. When you've got moving averages, this is the other thing about moving averages, and we were talking about them earlier. When moving averages are sideways, and this is something people miss with moving averages. The thing that you should really pay attention to with a moving average is not whether price is above or below it. You should pay attention to the direction. And this is a really good example. Moving averages are sideways, which tells you what? Price hasn't got a direction. Yeah. Not going anywhere. When the moving average is pointing upwards, it means that price is moving upwards. When it's pointing downwards, it means that price is moving downwards. Now, when it's going sideways, as in here, it means that price is going sideways. So if you are a mean reversion trader or a trend trader, what should you do now? Nothing. There's nothing you can do because price is moving sideways. If you're a mean reversion trader, you need to wait for highs or lows or extensions. If you're a trend trader, you need to take trades in line with the current movement. You can't. So flat. So the only thing you can trade on the Aussie yen at the moment is fundamentals, which is potentially yen intervention and strength, which would be shorts. But where you'd get in, I don't know. Aussie New Zealand, we know all about this one. Pain of my existence at the minute. Pushing down again a little bit this morning. We're not really getting anywhere. We have a little push down, but hopefully these lows will hold, and especially this low. So we'll see. I don't think we're going to get a lot of movement today ahead of FOMC, but we'll see what happens. So Aussie New Zealand, obviously we are in now a very strong squeeze and downtrend on this one. New Zealand unbelievably strong against the Aussie at the minute. So it's just the perfect storm. Every figure that's come out of the New Zealand camp has been massively good. Every figure, including the interest rates that have come out of Aussie, have been a miss. So this thing has obviously just got squeezed to death. So we are massively extended now. So if you look at the previous extensions, this one here, we got an accumulation drop. This one here, we got a pullback. I'm looking for nothing more than a pullback to try and get out of this position. When I'm out of this position, that's it. I'm not getting back in long. Not at the moment, not until we got some kind of fundamentals that tell me that this thing is going to power up. Interest rates next time. We need to see inflation holding. We need to see them put their interest rates up by 0.5% so they get on top of it. That's going to bolster it. Until that happens, they cocked up basically. They didn't increase their interest rates by their forecast and the market went, what? Nah. And it collapsed. So you just got to deal with it. You get caught on the wrong side, you get caught on the wrong side. You've got to try and get out. So bias on this one is now short until they say otherwise. So if you want to get in this, that's a nice short entry there. Any extensions to the upside for shorts. Although I'm obviously going to be doing the opposite until I get out. Aussie dollar, US dollar, shorts. Again, lovely trender. Market structure, very, very clear, very simple at the moment. So again, Aussie cocked up the rates. US dollar, not doing bad. No reason why this shouldn't continue down. We've had weak US dollar recently, moving, off of the news. FOMC could well come out super hawkish today, and that's it. Bang, we're off. We're down to the downside. We've got other news as well, don't forget. So, we've got the PMI figures this afternoon as well. New home sales, that's going to be negative. I'm pretty sure that's going to be negative. And obviously we've got unemployment and durable goods. So, if you get green, very unlikely new home sales are going to be green. But if they were to come out green, it's all good. Don't forget. Remember the scorecarding system. Yeah. These have all got scorecards attached to them. Whether they're tiny or not, doesn't matter. They've all got scorecarding. If the scorecarding is all coming out positive, the market will be buying the US dollar. So if FOMC come out bullish off the back of a load of green news, bang, everything against the US is coming down later. So good opportunity. It's not extended at the moment on the hourly or the 4 hourly. But, if you want to stick your fib on, if you like your fibs, which we all like a fib. Yeah. Regardless, I proved this point the other day, didn't I? These levels don't work. But these levels tell you that we're in a pullback. So, in the simplest form, the Fibonacci is good for saying, yeah, we're at least in a decent pullback. No, you can't use a particular level because it's just not reliable enough. But we are in a pullback. Yeah. So at some point, could be there, could be there, could be there. It's going to come down in all likelihood. So looks good for shorts, Aussie, US. So if you wanted to start a position, the reversal alert was probably there. And then obviously we went sideways for a day before we broke. So looks good. CAD Swiss. I like the CAD Swiss long for a technical reason, as well as obviously CAD fundamentals. However, the Swiss franc is very strong at the moment. So it's a difficult one to really pick a strong direction on. Recent, since the summer, we've been down. This is basically because of this. We had oil prices starting to drop. We had the Swiss franc decide to unexpectedly increase their interest rates without telling anybody. That went mental. And since then, we've had a strong Swiss franc. We will continue to have a strong Swiss franc, but we will also get Canadian dollar strengthening with oil and the US. So this one's going to be quite a battle, I think. We're more likely, I think, towards Christmas to see some kind of balance form down here. So I don't think it matters really too much which direction you trade this one in at the moment. Right now, it's, again, look at your moving averages on the 72. We are, we're starting to flatten out, aren't we? Yeah. So that is flat. That is getting flat. Yeah. So it's sideways. We know it's sideways. So you got two choices. You can either play a range, or you can play a range breakout. But at the minute, until we've done something, or you can play a failed range breakout and assume we're going to stay down here. But until we move somewhere, there's nothing you can do with it, is there? It's just flat and sideways and not doing anything. So can't even get to a range high on that one. CAD yen. So I cover all the yens again, as I usually do. I'm only interested in shorting yen pairs at the moment. So I'm expecting intervention or strength. And I'd rather trade it against weaker currencies like the euro, the pound, the Aussie. So those are my favorites at the moment. The euro yen is set up beautifully at the moment, but CAD yen, we've had the strength. We are now in a sideways movement. We're not going anywhere. We have broken the low and we are holding towards the lows at the moment. So any kind of movement to the upside is probably a decent short. This is the first break, the first market structure break we've had confirmed. We had the high put in, we put the low in, and we were like, yeah, all right, that's happened many times before. Then we came up, we put in a lower high, just about. And now we've put in a lower low, just about. So market structure now, you need 4 points really to confirm market structure. That's it. So now if we're going to continue market structure, i.e. this buy cycle is going to end and form a sell cycle, this is what we're looking for. So we're looking for shorts. Swiss yen, similar story. This one's contracting at the moment. That thing is what's got a little bit of a spanner in the works with this one, because the Swiss franc, when it pumps, it pumps. So it's difficult to tell really whether you should be shorting or long in this. Moving averages tell you obviously it's going, it's just going sideways at the moment, as we can see. So what do you do with it? Not a lot. You can really do that one at all. Euro yen, however, is looking good. So we've got that high put in, we push back down, we double bottom, we push up, lower high, and we put that lower low in. So the market structure shifted to the downside. We're right where I would expect potentially to start a new move to the downside. So as I said earlier with this one, on the hourly you are extended. And you've got this propulsion gap out of this accumulation that could act as additional selling pressure. So this is where the sell move started. If those sellers are still in, holding long term, and we're going to hold a month or a 3-month move, go short. I think there's a third choice. What, stay out? Yeah, if that's your third choice. Yeah, the yens are just looking at all the yens. It really is a coin flip with all these at the moment. The intervention you can see with the pound. This is what happens when the central bank intervenes. We know what happens with the yen when a central bank intervenes. We get big, strong movements, and there's never a negative intervention. Yeah, no country or central bank would ever knowingly intervene to weaken their currency status. So you're only going to get positive intervention. The fact that the Bank of Japan have now done it twice in the last couple of months suggests that they've had it. They've had enough. So the market as well, since they intervened, is also saying we're not buying. anything against the yen. Yeah, they're not selling the yen out. They're holding, stroke adding to. So we should see strength coming. But in a crisis, in an economy like we're in at the moment, with what's going on, it's very hard for anything to move fast unless it's got some amazing or some awful news. So hence why we're seeing a lot of sideways on everything. New Zealand yen, again, another one that I'd look for potential shorts on. We're extended on the 4-hourly now. So worst case scenario, yeah, we should be looking for some kind of pullback. We've got a very nice strong move. We've just taken out liquidity. So if we break back down below that level, and that is a liquidity run on the highs, we should be looking to come down and challenge some lows, shouldn't we? So again, this is looking good. You've also got the added bonus of a yearly high here as well. So this is the high of the year. If we do manage to push up into there, which is only 3/4 of an ADR away, we're likely to get a load of limit orders sitting there, aren't we? Because what was this? Market structure break to the downside. What are we in at the moment? Lower high potential. So if we do double top, again, it's going to double top after a massive strong run. Daily's extended. No, daily's not extended, is it actually? No, it was extended there. So you've got 4-hour extended. Hourly is also extended. So this is looking good for shorts. I've got New Zealand on twice at the moment. I can't take it myself, but looking good. And obviously US dollar yen. We know about this is why the intervention happened. It's much clearer on the US dollar yen intervention because the money is pulled out of the US dollar to put into it. So this one will always move much, much, much faster. Obviously, the US dollar news gave the US dollar weakness. So this is not yen strength here. This is just US weakness. And if we're going to get US strength, it's going to push back. So potential short opportunities in there. And if the US dollar does gain enough momentum to get towards this 150 level again, they're going to intervene. So when they intervene against the US, everything will come down against the yen. So, hence me having the short bias. But at the moment, I'm just not really in a position that I want to take any yens on. If I had less exposure onto other instruments at the minute, I would probably take this euro yen today. I would have taken it already, but I've got too much on at the minute. So that's those done. Euros. So euros basically still biased short. Again, after the rally, the market was unimpressed with the rate announcement. It's unimpressed with inflation. They are forecast to have the second or third worst recession out of the entire world. Guess who's at the top, guys? Yes, UK. We're going to have the worst. Behind Russia, obviously, who are just imploding. But other than Russia, we are forecast to have the worst recession and highest inflation figures, followed closely by Europe. Mainly, I think it was it Italy or France or both? One or the other, I can't remember. But anyway, yeah, not looking great for the euro. They can turn this around by accelerating their interest rates. So the rest of the world, we're getting up into the 3s, the 4s, potentially into the 5s in the next month to 2 months. The euro is still way back behind us in the 1s and 2s. So, and forecasts for 1s and 2s and things. So they've got a long way to go on interest rate rises. They're behind the curve. They were in the worst situation. So they can still turn this around. It depends on Lagarde's aggression, really. We won't know. But right now, the market seems to be cooling on the euro. So, and I feel this is weaker than the majority at the minute. This run was into the rate announcement. And obviously, since we've had it, it hasn't really done an awful lot. It did have a little push after the rate announcement, which is to be expected, but the market's really cooled. So the euro, I think we're getting to the point with it now where we'll probably start to see a new sell cycle start. So I've got a kind of short bias on it, but I'm nowhere near as short as I was and I have been on this thing. But particularly against the US dollar, the yen, and the Swiss franc, and the CAD. So those four would be my choices for shorts. The New Zealand dollar and the pound, this one's more likely to go sideways. The New Zealand dollar, until that cools down, I don't know. It should be coming down hard, Euro New Zealand. But the reason I'm less interested in shorts on this is because the New Zealand's been so strong. I think the New Zealand's going to cool down a bit, which is going to give the euro a time to pull back. Whereas the others, I think, are probably going to continue to be strong. So with all of these euros, really, I wouldn't be unhappy shorting any of them because even if you do short them, it's not strong enough, and you're going to get if you get into like a drawdown situation, the other currency at some point is going to wake up and push the euro down. And the pound is very much in the same situation, I think, at the moment. So shorts on the euros, Euro CAD. There's nothing extended at the moment, really massively. Euro CAD was this morning. We've obviously missed that. It's already gone way before in Asia. Euro Swiss, not quite there. You can see I'd had a short on that already, and I will be shorting it again. So I'll be taking shorts on this. Any extensions above the hourly 14 RSI, I'll be getting in short on that. Euro pound sideways. Euro yen we covered. Euro New Zealand, as I say, this one's coming down. So this would be my my least interested shorts, because I get the feeling New Zealand, as I say, we're going to have a little bit of weakness in New Zealand, which should drive the euro up a little bit against it. But don't know. And Euro US, obviously, I'm short at the moment. Beautiful reversal. Finally got the break, retest. So obviously this is all going to depend on FOMC. So yeah, this could easily just go completely that way. If FOMC is all hideously bearish, US is coming down again, isn't it? So you never know. You just never know. Pound. So the pound obviously stance on this one. Fiscal policy. We've been waiting forever for the fiscal policy to be put in place, and the market, since we had that last Thursday, has just gone, whatever, nothing. Just haven't had any movement. So this is where we had the announcement. I was expecting, I don't know, just on the speed of movement that we had with Liz Truss screwing up like that. Yeah, look at normal price action. Liz Truss, Bank of England. I was expecting at least a couple of ADR. At least give us some indication of, are you interested or not? But we got nothing. So based on inflation, interest rates, economy, state of the country, and state of the government, you have to think we are going to see a weak pound moving into the next 12 months. So I'm biased short from a fundamental perspective. From a technical perspective, it's not going anywhere. So any extensions, 4-hour extension, there's an opportunity for a short there. Any hourly extensions to the upside on any of these, I'd be interested in shorts. Just waiting. But I get the feeling the price action is going to be very slow on it, and you're going to be reliant on the other currency making its move. Obviously, Aussie dollar, very weak at the moment. Therefore, pound's taking advantage. Even though the pound is weak, don't forget, we are the largest financial centre in the world. Most transactions in the FX market go through London. So regardless of whether we're weak or not, there's a lot of money goes through the pound. So we are still, whenever you get a currency that is weak, the pound will still probably trump it. Like the US dollar. If you've got a weak US dollar and you've got a weak Aussie at the same time, the US dollar will beat the Aussie. Can I confirm we've only had one ADR hit today? No, we haven't. We've had multiple ADR hits today. Aussie, New Zealand, all the New Zealands basically. A lot of the New Zealands. But that'll be dependent on your broker. Aussie, New Zealand, yeah, that's it. London larger than New York, yeah. For the FX market, London is bigger than New York. More transactions go through London in the FX market than through New York. More stocks go through New York than through London. Yeah, but we're the largest financial exchange in the world, London. If you look at there's something like 7 to 8 trillion a day is transacted through the FX market. London gets more than five of that. Usually, on an average day, we get more. The reason you see, and you know, the reason you often see larger movements in the New York session, you do. I mean, you do and you don't. It's you know, it is a little bit horses for courses, isn't it? Really? But look at the sessions, yeah. Those are the London sessions, and then look at the New York session. Look at the New York session. There's London. There's New York. Yeah, a lot of the time, the London session is bigger than New York, and that's pretty equidistant. But it's not to do with movement. It's to do with volume. There's more volume goes through London, and more volume obviously goes through the stock market in the US. But not that really makes any difference. But it helps. It helps us because obviously every currency transaction has a fee, and our banks take that fee. Our banks prop up our economy. So that you know that's why the pound is good, and that's why when you see PMI figures, coming out, this is the most important one. Services PMI, because services is banking and finance. Manufacturing is obviously manufacturing. This is our biggest export, our biggest driver in our economy is financial services. So the services PMI is the biggie for us, for the UK. We don't export anything, do we? We don't really make a lot and build a lot, or we haven't got a lot of natural resources. So, you know, we're all about financial stuff. Mohammed, pound New Zealand would be difficult to forecast fundamentally. Yeah, at the moment. So pound odd and pound New Zealand are very similar. But, you know, as I say, pound odd's going sideways. We've had an RSI extension on it. But, you know, since this happened and it calmed down, it's very, very difficult, the pound, to trade because there's very little movement against anything. Again, it's a little bit like the yen, the pound, for me at the moment. I want to be shorting it from a fundamental standpoint. I think there's much more chance of something going wrong than there is going right for us. So I think even if we do have a grind and we push up a little bit against something because it's weak, when the other thing does decide to wake up, we're going to get that. It's the climbing up the stairs, falling down the elevator shaft thing. I think we've got a lot more chance of falling down than we have of climbing. Yes, it can climb and it can keep climbing, but at some point, and this is what position trading is all about, is waiting for payday. So that's why I've got a little bit of a bias on the short side. Pound Swiss, you know, sideways. Look at the 72. It's flat as a pancake. What are you going to do with that? No idea. Pound yen, sideways. Pound New Zealand, sideways. I mean, look at this one. It's just, yeah, what do you do with it? There's nothing you can do with it at the minute. So, you know, the pound, I haven't seen the pound. We haven't had an ADR light up on the pound strongly and hold for a while. We've had no RSI extensions. You know, there's nothing. It's just nothing on the pound at the minute. So I was waiting for that fundamental shift off of the fiscal statement, and we didn't get it. So what do? It's nothing you can do. You can't trade the pound at the moment because it hasn't got any direction. It's just aimlessly wandering. The only way you can trade it is by having a speculative bias on something else. So US dollar, I'm anticipating strengthening. Therefore, I can trade pound US dollar short. A little bit like the euro. I'm short euro US dollar for no other reason than I'm expecting that. And if that doesn't happen, I know the euro hasn't got the strength to go mental. The euro is more likely to do the same thing as the pound is going to do. So all we've got to wait for is something on the US dollar side to trigger along. And then, poof, it'll come down. So yeah, pound's just hard to get into at the minute. There's nothing really you can look at that says good or bad. Just want to quickly see what the DAX is up to. That's something else I'm looking at as well. Retest entries. New Zealand. So yeah, the New Zealand, obviously, we've had the news spike. So the usual shenanigans around rate announcements. We've rejected ADR at the moment. We've got the reverse alert off of ADR, which is lovely. So we'll see what happens with these. If you haven't got these ADRs, it's because you didn't get slipped to the levels that others got slipped to broker-wise. So your broker data might be slightly different, in which case, your ADR might be there if your broker data only went to there. That's yesterday's low, though. That's why that's there, because they obviously stop ran yesterday's low before they took it to the upside. Then they stop ran yesterday's high, and then they brought it back down, and now everyone's crying. They've decided to move it to the upside because that's where their book's balanced. But whether that's fundamentally long for New Zealand, I don't think so. Okay, PMIs have just come out. So let's have a look and see if we get any movement off the PMIs. Uh, 48.8 on a forecast of 48. Manufacturing 46 on a forecast of 45. So the services are up. Manufacturing is up. Composite is up. So it's all bullish pound. Don't get too excited. So all bullish pound. Yeah, but the market, if you look, look at what the market's done into the news, kind of, they know what's coming, don't they? There's nothing exciting happening there. So we're taking out the Asian highs. Potentially we might get a push up into yesterday's high. But what do you do from there? Just not very exciting, is it? Me. So New Zealand dollars. I think we're at the point with the New Zealand dollar now where we've had a very, very nice strong run. Thank you very much, New Zealand dollar. We've had your rates. So again, it's the same sort of thing as we anticipate a country increasing their interest rates, and we anticipate them starting to get on top of inflation. The market will anticipate a strong move. After that initial, let's buy the New Zealand dollar because they're going to increase their interest rates, has sunk in and they've gone, actually, it doesn't really make any difference. We'll see that move to the downside starting. So obviously with this particular one, with the Canadian dollar, we've had weak US, we've had weak oil, which has driven this one a lot faster and a lot harder. That is all changing potentially today. So the oil is starting to rally. We thought that before, though, didn't we, last week? So until it happens, it's not happened. And we're potentially going to get some bullish movement off of the US dollar after that weakness on the back of FOMC. So typically when we've had really bad news, as we had with the US dollar, the FOMC will come out, the statement will come out and say, don't worry too much because of X, Y, and Z. And they'll counteract any negative news to try and bolster their currency. Yeah, so it's the talking head aspect is the FOMC statement, unless they are really worried about something, in which case then we'll see something change. But if that's going to happen, the CAD should get dragged with the US, and we should see some movement to the downside. So I'm getting in, got another position on that one this morning on the reversal alert, that one there. I'm well within an ADR. If we get an FOMC movement, I'll be out of that one this afternoon or this evening. Oops, sorry, New Zealand dollar CAD. So I like that for shorts, just on exhaustion, but it's not it's just a very, very grindy one at the moment. So New Zealand dollar Swiss, same sort of thing. I like it as a short based on Swiss franc strength. Swissy, again, Swiss banking sector, we should see decent movement on this one to the downside when the New Zealand starts to weaken more. So you can see the Swiss franc, that was Swiss franc strength that drove that down. When the Swissy takes control, it will back, or there's nothing that stands in its way. It will just move. So again, this is great. We had an extension on that one on the 18th. We came up, took out the high, double topped. We had the reversal alert in there. Extended on the 4 hour. It was also extended on the hourly there. Yeah. So that was the entry last Friday. Not really gone anywhere at the moment, is it? So just waiting still on that one. But that's a nice short. And New Zealand dollar yen, we covered New Zealand dollar US dollar, same thing. So we're just in a holding pattern at the minute. Double topped and almost triple topped. And back in this area of balance. So we'll see. But obviously this is all driven by FOMC. So, any opportunities to get into anything today, it's all FOMC. So whatever you're doing it with a coin flip at 7 o'clock. So whatever you do today, it's either going to work or it's not going to work at 7 o'clock tonight. We've also got Macklem has just crept onto the calendar. He wasn't there yesterday. So he's talking later. Okay, so that is kind of like our Chancellor's statement, really. So he will be talking up, obviously, what's going on in Canada with their finances. So we may get some movement off the CAD. That's really late. I suppose it's because of the holiday. So with all of this evening, bear in mind, tomorrow we have nothing. I will cover the US pairs in a minute, but just while I'm on the calendar. Tomorrow we have the bank holiday. So the markets are closed in the US tomorrow. There's no futures trading tomorrow. They will be unloading their books later or during today. So the market will want to get as flat as it can for tomorrow. Whether that's already happened or not, I don't know. So off the back of FOMC, we may see some huge movements where they're offloading positions later today. So there could be some really good opportunities because tomorrow, obviously, there's going to be nothing happening with US markets. That will mean in the afternoon tomorrow, we have very light liquidity. Light liquidity equals very large slippage. So there's a good opportunity tomorrow potentially for some fast, hard moves after, towards the back end of London, where there's not a lot of liquidity around to fill orders, and we might get some decent slippage. So might be a good fun day tomorrow. But yeah, New Zealand, US, looking for shorts on that one, assuming the New Zealand dollar is going to start to weaken and we're going to get some reversal off of the back of the US bad news and move down. If not, then obviously it's going to push up. If it's going to push up, you want to be looking at scaling in on the way up to that resistance, really. But no, it's not extended at the moment anyway. So the opportunity was last week on Friday. All the USs, again, you got to be bullish US in a recession. They are going to beat everybody else in the recession normally. But, this is not a normal recession, is it? The one that we're in now. It's the biggest pretty much ever. So it's very difficult to tell, but we would expect the US to hold up against most currencies. So any kind of pullbacks on the US, we'll be looking to buy them, especially when they're at lovely support resistance levels. Yeah, like that one. Yeah, so it doesn't get any more. If I draw it in as a range, as a zone, doesn't get any better than that, does it? So got these highs, multiple hits on these highs, accumulation there, rejection, rejection, So yeah, looks like a lovely spot, doesn't it? But it's going to rely on US sentiment being long. So yeah, long opportunities. That was your entry, obviously here. You had an entry there, and then we had the collapse, which brought us down, extended. You wouldn't have had an opportunity to get in until somewhere in this range anyway. You're probably out of it anyway by now. But if you're holding any longer term, right now is a good spot to be getting in. If we had an hourly extension to the downside, which we have, that reversal alert right there on the hourly, really good entry long. I've got US on at the moment, so I've got Euro US short. I'm not going to overexpose myself on the US today. I've got one on. I'm not going to take another one. I'm not just because of the way I position I'm in at the minute. I'm not going to take an extra US, but and US dollar yen. Again, this is the one that I wouldn't want to take long. Saying that though, if the US is going to pump, the US is going to pump. This is going to go up, but I wouldn't want to get long on it and get into a drawdown situation when there's the potential of another yen intervention. Yeah, I mean, that's news, but the yen interventions can really, really hurt. You're looking at a 300% ADR move, possibly more when they do intervene. So, but hopefully that's it. That's all they need to do. Yeah, that one. Market's got the message. We don't want to be fighting you. So up to you on the yens, really. But I'd really be looking at other opportunities, and Euro yen is much nicer at the moment. But anyway, that's it for this morning. That's all I've got. I will be working on the any further development on that opening range breakout. Excuse me. Just testing and breaking, basically, is what I do. So I'll let you know how that develops over the coming days. But yeah, don't expect a lot of movement today. So I think we've had it potentially there. Obviously, the usual thing that we get ahead of FOMC is that. So I wouldn't get too excited. I'd be looking to sell range highs. If we were to get back up to there, more than happy to resell it. If we do break down, yeah, happy days. But I wouldn't expect us to get out of the current sort of range area. So, you know, there's ADR. If we do move down on the DAX, I don't think we get anywhere near here today until FOMC, obviously. So keep you updated on the EA. Yeah, I'll let you know how it pans out. But I got to do. I'm not the sort of person that I have literally. I mean, if you saw the EA, my EA development, yeah, this is me developing EAs, right? This is just one folder of my EAs, right? I build EAs as a hobby and backtest strategies as a hobby. Every time I come across a good strategy and I think, oh, that looks good, I test it. I build the automation for it. I test it to death and I throw it away because they don't work. They just don't work. But every now and again, you come across a strategy that does work. And it only really works because it's a momentum strategy. That's the only strategies I've really found. Position trading and momentum breakouts are the only two strategies I've ever found that you can work successfully with an EA. And this is obviously a momentum breakout strategy. But the problem with any breakout strategy is you will have a very high failure rate on it because we know breakouts fail because of the market structure. The whole purpose, the whole ethos of market structure existing means that breakouts fail because when you get a structure move, a fast move in one direction, it's always breaking out. And after a breakout, you always get a profit take. So you fail. They always fail. Breakouts always fail. which is why breakout trading is so difficult and why everybody sticks limit orders at range highs and lows, because there's an 80% chance of a range holding and only a 20% chance of a trend starting. Yeah, so range breakouts are very hard, but range breakouts that happen because of a fundamental, like a cash balance open being broken, are a very different thing, which is why the ORB is so successful. And it's been taught for years. It's a strategy that's been used for many years in stocks. The ORB 5-minute is a lot of stock traders' bread and butter. It's where they make the money. And it works on indices. It won't work on FX. It only works on indices because you have to have an opening range, a definable opening range. With the stock market, with the FX market, there is no time in the FX market where it goes mental. Yeah, at some point, usually between 8 and 10, it wakes up. You can't have an opening range breakout based on something that is random every day. Stock market, the Frankfurt Exchange opens at 8 a.m. On the dot, 8 a.m. it goes mental. The New York Stock Exchange opens at 1:30 p.m., 2:30 UK time. At 2:30 UK time, every day without fail, it goes mental. The FX market moves whenever they fancy pressing the button to dump the next lot of orders. And it depends whether that bloke's having his first or second coffee. Yeah, the guy sitting at the execution desk for the market making desk or the hedge fund desk for that morning that's got to execute the orders, he's not on any time restraint. He's got to get the orders executed today, but there is no idea, it doesn't happen at 8 a.m. on the dot, boom, pound moves. It doesn't happen. So you can't use this sort of strategy on FX. Look at the volume on an FX pair. I mean, obviously this volume is utter rubbish and it's no use whatsoever anyway, because it's just my broker's volume. But look at the volume from sort of, from anywhere really. It's the same, isn't it? The volume is around about that level, all the time. Prices moved, but the volume doesn't. Yeah. And then look at something like the DAX. Look at the volume. Bang. Yeah, that is your open. Look at the volume spike. We go from there to there. One candle. Huge amount. And same with the US stocks. Yeah, it's same time every day without fail. Yeah. If you asked a child what time the New York Stock Exchange opened, yeah, and you said to them it's when everything goes mad, they would know exactly what time the New York Stock Exchange opens. 2:30. Yeah. So you have to have the opening range breakout is purely based on initial cash balance and an initial order dump. That's what it's doing. It's making money based on the fact that we can time something on a daily basis, which is why it's so good and why it works. It's just how do you manipulate? How do you milk it? Our job is not to pick a direction. Our job is not to forecast anything. Our job is to how the hell do we milk this thing? All you got to do, isn't it? Your job is to milk the market, which is why you can't milk it with FX. That's why FX is so difficult to trade, because there is very little continuity apart from the fact that we know it's going to go up and down over time. We know it moves up and down in waves, but how do you milk a wave? It's a 50-50 shot. You just got to wait, haven't you? It's all we're doing is we're scaling in and waiting for the waves. We know on indices at a specific time of day something's going to happen, which is why it's so good. But anyway, I'll let you know on that. Anyway, I'll if I can't find a solid, nice edge that I can put automated, then you might as well manual trade it. But what I'm trying to do is I'm trying to develop, and one of the reasons I keep looking into this is because I'm trying to develop something I can stick on a prop firm and forget about. And I know I keep saying that doesn't exist, but it's something that I trade myself and I know works. It's just I'm the problem. And it's the same with all traders. I'm the problem. I'm the one that takes the 1.2%. And then because I'm not happy with the 1.2%, I overtrade. If I can get an EA to just take whatever it does and wait for 5 days until we get that one that passes the evaluation, that's what I'm looking for. And you know, the ORB is just that one thing that works. I know it works because I've done it so many times. It's just it doesn't work all the time. You know, you can't find that one thing that works all the time. It doesn't exist, does it? You know, it just doesn't exist. I need to make sure that it keeps within a 5% to 10%. Well, not 5%. It needs to stay within a 10% drawdown. So max drawdown I can get on it has got to be 10%. Yeah. See, look, 10.39 blown. So this is what I'm testing. I'm trying to achieve with it is 10% is the maximum drawdown on decent prop firms. It's never going to hit the daily because it's only taking maximum risk per day is 3% max. It can't do more than 3% risk a day. So it's never going to hit a daily limit, never. But it could hit 4 days on the trot, completely range bound or hideous, a little bit like the DAX has been for the last 7 days, remember. That's what will blow the prop firm. Day 5 will be a 10% win. But if we get 5 days on the trot, that's the issue. So this is what I'm working towards anyway with it. And if it works, I'll let you know. An army of robots working for me. Wouldn't it be nice to sit on a beach and drink Mai Tais? Anyway, enough of that pipe dream. I'll be back tomorrow 7:50-ish because I've got spinning class tomorrow morning, so I'm always a little bit late on Thursdays. But I will be back tomorrow, and obviously we will see how we get on with FOMC. I'm in a class tonight when FOMC is released, so I'm not trading it tonight. I will be back for obviously the aftermath. So just before I go, ahead of FOMC, any positions you've got open that are in profit, I would recommend you just stick a break even on them or take them off. If you've got something that's in a decent profit, either lock it in. So let's say, for example, Euro US dollar gets down to here by 6 o'clock. I'll be locking in and I will either thank you very much or I won't take a loss or go into drawdown. So just keep that in mind. And that goes for all instruments. If there is a massive shock in FOMC, everything's going to move. So just take all profit off the table, put it in the bank, and just manage your positions ahead of it. And there's nothing you can do. You're on the train, basically. So FOMC is driving it. I might as well go to my spin class this evening, because what am I going to do? Sit here and watch FOMC and watch the candles go up and down? It's not going to do anything, am I? I'm certainly not going to trade it because it's too crazy to trade. Could also work on the US indices. Yeah. And this will work on all of them. So this is why I'm setting it up as I am. Opening range start. So if I want to trade the US Open, it's that, isn't it? For me, anyway. 1440. That's 1445. And that is 1800. The reason behind this, stop trading the breakouts, is, as you can see, the lines stop getting drawn here. Yeah. So this is a momentum strategy, opening range breakouts. So if we go opening range and we do that, right? And if we haven't broken out within an hour and a half, I'm not interested. It's not working, is it? There is no momentum. You can't trade a momentum strategy that goes sideways. So there's a line in the sand. And again, this is something I need to test. Look at what happened today as a prime example, right? what I'm looking for is when we open, we pick a direction and we go. If we haven't gone really within the first half an hour, if we haven't broken in the first half an hour, it's probably not going to work, is it? I give it a little bit of room because I've noticed in the past when I've been watching the EA running in the strategy tester, I've noticed that we do get a test of one end and then it collapses, obviously. So what you get is you get the opening range, it breaks to the downside, quickly comes back up again, up to here, and then it flies up. So it's a failed breakout. We know they happen all the time. So for the failed breakout to fail, and then it to get to the other side of the opening range, I need to give it half an hour. And then if it's going to go that way and it's going to trend up for the day, I find that around about an hour and a half gives it time for an opening range breakout to fail and it to get to the opposite side breakout to go. So that's the reason for that. But again, I will be testing all of that. Average testing time for me on EA is somewhere between a week to 2 weeks. So imagine how long I have spent testing this and building. Don't forget I've got to build all this as well. Building, testing, throwing away. Not one of these works. They all work. They all work to a certain extent, but none of them stand up through stand up to long-term backtesting and out of sample backtesting. Yeah. I spend weeks. Some of these, I mean, things like that, I spend 2 days on because it's a daily, like smash bars. They're daily, so you run them on a daily. So you know they're really quick to test because there's not a lot of settings in them. Smash bars. That's not set up at all for the DAX. That's got totally the wrong settings. But anyway, but yeah, there's all sorts of stuff I test. That's what I do. I spend my entire life trying to find the Holy Grail and letting you know it doesn't exist. But they all work, you know. So things like smash bars are really good for a smash bar. If you don't know, is basically a day where it breaks out on a daily, and you take the reverse of the smash bar basically. So it smashes out and then it comes back down. What is it? A failed breakout. You know, everything's a failed breakout because failed breakouts are creating market structure. So the smash days work really well. A smash bar is also a liquidity run or a stop hunt. And you know, when I keep saying about every course you take teaches you the same thing in a different way. So smart money concepts teach you this, that, and the other. They're the same as a liquidity run, which is the same as a propulsion gap, which is a fair value gap, which is a day where it breaks yesterday's high and closes below, which is also called a smash bar if you look at it on the daily chart. Blah, 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 blah. It's all the same stuff. This is what you find when you test the same different strategies. You find actually all they're doing is the same thing. They're plotting different ways to enter on market structure. Market reversal alerts indicator. It's just plotting market structure. What is this? Market reversal alert there. It's a liquidity run. What's that reversal alert there? It's a liquidity run. It's all the same stuff. This is, you know, you find all these strategies. I've got loads of them. The best ones, the best ones are price action based, like this. Price action's king because price action is ahead of everything. Every strategy you find based on an indicator or multiple indicators will have a high failure rate because price action is what's driving the market, and the indicator tells you what's happened with price action after it's happened. So things like the smash bar, there is no indicator involved. An inside bar breakout There is no indicator involved. An opening range breakout, there is no indicator involved. It's just price. But it's not the move, it's how the risk is managed within the move. The stops, the trails. It's how this part of it, the entry and the exit, that is how you turn a strategy into a profitable strategy, not by adding another indicator to it. If you're using indicators, obviously, it's by adjusting these settings and finding out what works the best on each instrument. That's the best way that I found anyway, to take a strategy and make it work. Smash bars work well on the daily chart if you're happy to take 6 to 7 trades a year on an instrument. They're brilliant, but they're not designed to work intraday. They only work daily, and they only work on indices. They don't work on FX. And that's what I'm looking for. I'm thinking, oh, smash bar is an S&P, so the smash bar is designed to work on the S&P 500. Actually, I don't know what. Probably the setting I used. But yeah, this is basically, it works really, really well on the S&P 500. But what I was looking to do was apply it to FX, because I can't use this on the S&P 500 at the moment. It doesn't work at the moment because we're in a bear market. Not even trading, is it? So it's up wrong. What? I hope people turned it on, mightn't it? Sorry, this is what it's in development. So good, eh? Testing period is this? The year. So would you like an EA that works like that? Very simple. Go and look it up. Smash bar strategy. It's all over the internet. Works fantastically well on the S&P 500. Will not work on any other instrument. And you will have 48 trades. That was only a year, actually. That's not bad. 2021 to 2022. Oh, that's only trading till April, isn't it? I think. Yeah. So yeah, not bad. But what it won't show you is the drawdown. Yeah, it looks like it's really good on paper. That is because this strategy does not use a stop loss. Yeah, so this is risking a percentage, but there's no stop loss involved with this strategy. Well, it's an 800-point stop loss, which on the S&P on a daily chart is kind of there roughly. But yeah, it works well. No, but it's the sort of thing, and this is what I use with my pension account. I've got an investment account which I run daily strategies on, and I'm like George Soros or what's the other bloke, the rich bloke? I've forgotten his name. I always forget his name. The really, really rich guy, him, that outperforms the S&P every year. These strategies run on my account to give me a roughly 10 to 15% return a year, because they don't work intraday. Everybody's looking for intraday. I'd love to run this on a prop account, but it's not going to work, is it? Because my open drawdown is going to hit 5% at some point. But if you want to put 50 grand in your own personal account, stick this EA on it and do lovely for you every year. And I've got a I've got a battalion of these guys running on my account. I turned them off because we're in a bear market at the moment, but that's what they do. But no, you stick this on any time frame, like go down to hourly, for example. Same strategy. All he's doing is trading price action, nothing else. Yeah. It's a price action candlestick strategy. Yeah, and this is what I'm looking for. Can these awesome strategies that have stood the test of time? This was created 35 years ago. This strategy still works today, but only if you're an investor and you're happy to only take one trade a week. If you want to go intraday, no. And I've tested every setting. 4 hour. I thought, and this is my main focal for all these daily strategies that I've got, which are brilliant. My focus time frame is the 4 hour because it's not that far away from the daily, but it doesn't work. Just doesn't work. It looks like it's going to work, and then you get to a point where it goes into just a free fall, and that's because the smash bar strategy is a trend strategy. So when you find the S&P goes into a range, we die. It's just unfortunately what happens. But the beauty of the S&P is when the world is normal, that's what it does. So this works beautifully. And this will work. It's got legs on the 4 hour time frame. When we return to normality in this world and we get back to the S&P doing what the S&P does, yeah, when we get back to normal life, this will probably be deployed on the 4 hour chart. But it just does not work in a range. So all these periods, it will lose money. It will lose money there. 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 It will definitely lose money there. And it will lose money there. But it will make a lovely amount of money 50% of the time, which is what strategies do. 50% of the time make money, 50% they don't. They make more money when they do. You know, but look at this 4 hour. You saw the equity curve on the daily chart. Look at the 4 hour. Doesn't work. This is the life of a real trader. This is what we do. While I'm waiting, sitting around because nothing's doing anything, I have to occupy my time. I occupy my time looking for ways to extract cash out of this thing that moves up and down all day long. And that's what I do. Backtest strategies, and I get it all the time. You know, people, if you've got a good strategy, send it to me, and I'll build an EA for it in an hour, and I'll stick it in the backtester, and I'll let you know how bad it is, or how good it is. If you find a good one, hey, let's get into business. But, yeah. Anyway, enough of the waffle. Right, so. Oil's not going anywhere. I think today, sideways, we're not going anywhere, are we, today, by the looks of things? FOMC is just the only thing that's moving, obviously, is off of news, which is your euro and your pound. And we've got the US a little bit this afternoon. We've got the US moving this afternoon as well. So until we get news releases, it's a case of just sitting around and waiting for something to happen. So hopefully we get some positive US news at 2:45 after the market opens. If I can get the euro down to here, that'll be lovely. Break even if the euro then, if the US pumps on FOMC, happy days. All indices as well. If we get the euro pump, all these indices are coming down, FOMC, yeah? And this is why I'm poised, trying to get a decent amount on the DAX, because everything's coming down when the US indices, when the FOMC comes out, if it's positive. And again, say always the same 50-50 shot. One of those is going to happen, isn't it? All right, guys. So have a good day today. If you need anything, let me know. I'll be in the Telegram group. Good luck this evening. If you're going to trade it this evening and you want to try and scalp it, good luck. If you want to pass a prop firm this evening, go and get an account with E8 because they've got no time limits. So, better still, get 2 evaluations with E8. Go long on one and short on the other. just before FOMC. You probably passed today, so if you fancy it. Anyway, been there, done that. Blew the second leg. Have a good one. I will see you tomorrow morning. And anything you need, come in the Telegram group. Other than that, have fun on FOMC.